Hey guys, welcome back to Reserved Investments on YouTube. This is part 3 of my 2,500 subscriber Q&A series. Spoiler alert, unfortunately, due to the amount of questions I was asked, there is going to be a part 4. I know I promised you guys that I would wrap it up in this particular third segment. It's not doable because this video would be more than an hour long. And I don't want to put anybody out there having to sit through an hour-long video of me reading question after question. So we are going to split this segment up. Part 4 will be the finale. We're going to get right into it because we got a lot of ground to cover. First question is about finance. Sean, love the channel. You mentioned a lot about investing in things such as index-based mutual funds, S&P 500 index funds, or exchange-traded funds. However, I don't know anything about investing. Do you have any books you recommend? Yes, there are several. First, if you don't know anything about investing, you don't know the difference between an index-based mutual fund versus that of an actively managed mutual fund, you don't know the difference between a mutual fund and an ETF, or maybe you don't understand why stocks, meaning individual stocks, are more risky than that of mutual funds, the book that I recommend is Investing for Dummies. Don't let the title fool you. It is a book for beginners. It goes in, defines all those terms, and tells you how to properly set up a financial plan and or diversify appropriately if you are new to investing. The second book that I recommend is called The Millionaire Next Door. The Millionaire Next Door is a fascinating look if you are not a millionaire and you want to know how millionaires live. It goes in depth in statistics and analysis as to how most millionaires got their money and how they live their lives. I don't know if you guys are aware of this, but according to current statistics, literally 11 million U.S. households out there have a net worth of $1 million or more. Now, that's skewed towards people who are married because obviously dual income people can get up to a $1 million or more net worth rather easier than somebody who is single. So it's an interesting book. It goes in depth on how those people live, how they made their money, and it's very fascinating. If you yourself are not a millionaire and you do want to read into the lives of most millionaires, pick up The Millionaire Next Door. The third book that I recommend is The Richest Man in Babylon. This is one of my favorite books by far. The Richest Man in Babylon teaches investing basics through the use of fables. And what it does is it actually changes how you think overall about investing because you read these fables and they mirror things that happen to you or opportunities you have in your own life. And you can learn just by reading about the characters in these fables as to how they manage their own finances, their own lives, and the decisions that they make. Excellent book, well worth the entry fee. I think it can be had for less than 15 bucks. The last two books are a little bit controversial, and let me state what I mean. I recommend A Random Walk Down Wall Street. That's an excellent book in my opinion, but if you are new to investing and you have yet to read Investing for Dummies, you must read that book first because A Random Walk Down Wall Street will seem a little bit technical to the average person who has no knowledge of investing terms, of the difference between, like I said, an active managed mutual fund versus that of an index fund. So you got to read that book first. The last book that I do recommend with caution is Rich Dad, Poor Dad. I do not like the author of this book. I'm going to be very honest. The book itself, though, when he talks about an asset is defined as something that puts money into your pocket, a liability is defined as something that takes money out of your pocket, I really think a lot of people coming into the antiques and collectibles trade really need to read this book, Rich Dad, Poor Dad. It's really going to help you define these terms. As a matter of fact, spoiler alert, I have a video planned where I talk about people who invest in the antiques and collectibles trade and think they're buying assets when in reality they're buying liabilities that they think are assets. So that particular principle actually comes from the book Rich Dad, Poor Dad. Now, to be fair, Rich Dad, Poor Dad does not talk about collectibles. You're not going to find any information in there about collectibles. But it is a great book to get your feet wet on some of the principles that he teaches. What I have a problem with while we're on this subject is the author kind of goes across what I call an ethical line in the practice of some of those principles that he teaches. And that's why I do not like the author per se. I also do not like the practicality of the principles that he teaches. But overall, the fundamentals are there. So check that book out. I hope that helps. Next question. Sean, Are you aware at all of the growing market for old CRT TVs? Specifically, the Sony production monitors that are really hot right now in the retro video game community. I am. It's a very esoteric market. It's kind of interesting how the video game marketplace alone is propping up that market for those particular items. I was going to do a video on it. I then decided against it because I didn't think it would get that many views. If it's something you guys want to see me visit in an upcoming video, let me know in the comment section below. It's just one of those things that I steered away from, given the fact that I'm already 60, 70 videos behind on this channel alone. So I figured, why put that one in the queue when I haven't even gotten to some of the other fundamentals that I want to introduce on this channel first. But it's something I'll look at if you guys want me to. Next question. Sean, my question is about investing in tabletop RPG games like Advanced Dungeons & Dragons, Cyberpunk, Star Wars miniatures, etc. I do know somebody who makes a decent amount of money speculating in Warhammer of all things. That being said, I don't like these markets for the long term. It goes back to the question I was asked about investing in vintage Dungeons & Dragons products. It's not something I think is going to have a good, stable market going forward. It's too esoteric. A lot of these items, they're not mainstream like Magic the Gathering and Pokemon. So if you're looking for something to invest in, why wouldn't you go after Magic the Gathering and Pokemon when they're the mainstays of pretty much collectible card games? And if we want to look at tabletop RPGs, you can argue Magic is the crown at present time. That's pretty much the most popular RPG known that people play on a regular basis. So that's my opinion on them. I will tell you, back in the 1990s, I remember when the Star Wars collectible card game came out and the Star Trek collectible card game, and I never liked them. And people were arguing with me back in the 1990s that those were going to be the two big things because they had the Star Wars license and, of course, the coveted Star Trek license. So people automatically thought, because they had those popular licenses attached to them, that they would obviously become valuable and collected by other generations. Well, today, we know that isn't true. Listen up, Funko Pop collectors. Just because something has a popular license attached to it doesn't mean it becomes worth money and is something that becomes in the top tier collecting categories of most items. So you must learn from that. That being said, my favorite collectible card game of all time, believe it or not, was Jihad, which was then the name was changed to Vampire. But back in the 1990s, I used to love playing Jihad. I thought that was incredible. It was flawed a little bit, but overall, I had a lot of good memories playing that game. I don't know even if it's still in print. I doubt it because everybody is so into Magic the Gathering, Pokemon, and to a lesser extent, you have Flesh and Blood, Force of Will, Buddy Card Fight, Vanguard, all these other games that I've never devoted any attention to. But my advice to you is if you are thinking of investing long-term, go after Magic the Gathering, Pokemon, and just understand the risks, because even Magic the Gathering and Pokemon are extremely speculative at present time. Good question. Sean, what do you think of British comics such as Beano and Dandy as an investment? No, absolutely not. Reason being is the comic book marketplace at present time is being driven by American superheroes. It's great. I don't know if you're in the United Kingdom, if you have an attachment to Beano and Dandy and you just want to buy it because you have a passion for it, by all means, do that. But if you're going to invest in comic books, I hate to say it, the real action is American superhero comic books, primarily from 1975 and or earlier, that are key issues. That's really the market that's on fire. It is very speculative. It is also established, though. It is an established collecting category. That's all I'm going to say. But I would not be putting my money in British comics such as Beano and Dandy or any other popular British comic books or even Japanese manga. I don't like Japanese manga at present time either because that's a very esoteric collecting category. And you can argue, yes, American collectors are drawn to that. I don't deny that. But looking at it from the standpoint of investment, right now where the big money is, it's in American superhero comic books. Will that trend change? Most likely at some point, yes, it will. I've said this before. most of these comic books are overvalued over the long term. Eventually, there is going to come a correction in that market. If you look at Amazing Fantasy 15 right now, the price is starting to stabilize, which I'm thrilled about, because now I have clients that are going after that book, and they're like, this is wonderful. If I look at the last couple of prices sold for a 7.0 copy of Amazing Fantasy 15, I know exactly what I should be paying at present time. It's no longer going like this in most cases. There are some exceptions. So that's what I would tell you. The market belongs to American superhero comic books. If you're going to invest, go after pre-1975 issues for the long term. Next question. Sean, just discovered this channel a week ago and really enjoy your various videos. One thing I'm interested in knowing is, how do you know when the right time to sell when you own assets in a speculative market or a market that's in the midst of a speculative bubble? It all starts with your plan. You do have a plan, don't you? Because that's the key to investing in anything. Any market, any collectible, any antique, even financial markets. I tell people, work from a plan. Easiest way. That's my problem with a lot of Pokemon collectors that are coming at me right now saying, Sean, I paid $1,000 for this Pokemon card, and if I sold it today, I could get $2,000 for it. My next question to them is, well, why don't you sell it? Well, Sean, it's Pokemon. It can go to $3,000, $4,000, $5,000, and I look at them and I tell them, and it can also go to $500. Because if an item can go up that quick, it could also drop that quick. The risk versus reward ratio is what you got to look at. And if you have a written plan, that should be something that is in that written plan. I'll also tell you this. Any type of speculative asset, it is very difficult to predict the bottom of the market and the peak of the market. It's not going to happen. For instance, if we go back to the financial crisis, what financial crisis happened in 2008, 2009. In 2009, looking back, we now know in March of 2009, the S&P 500 hit a low point of 666. That, looking back in hindsight, is where the bottom of that market was. Well, back then, you didn't know that. Nobody could have predicted that. Today, the S&P 500 at present time is roughly right around 3,400. So who could have predicted that even with the pandemic raging, the economy in shambles, that as of September of the year 2020, the S&P 500 was still going to hit a record high of 3,400 and some points? Nobody could have. So that's what I mean. You cannot predict the bottom of the market. You cannot predict the peak of a market. You have to have a written plan. A written plan will also help you from getting overtly emotionally involved into these items. A lot of mistakes that I see a lot of these collectors do is they have an emotional attachment to the item. They want to buy it, so they call it an investment to convince themselves that they're buying an asset. Goes back to an earlier question that I answered. Be very careful. An asset is something that puts money into your pocket. A liability is something that takes money out of your pocket. A lot of you guys out there, I'm going to say it, and this is a great video to state this in, are buying liabilities that you think are assets. And that's why you fail in investing not only in antiques and collectibles, but in everything else. You must learn to build wealth. You do that by buying assets, not by buying liabilities. Enough said. Next question. Sean, possibly thanks to Scrooge McDuck. Oh, I love DuckTales. I used to come home from school. I used to love watching DuckTales. Even today, I have Disney Plus. You know what show I watch the most on Disney Plus? Lizzie McGuire, because I love Hilary Duff. More on that in another video. I know it's a little creepy. But I also love DuckTales. So I'm going to repeat your question again. Possibly thanks to Scrooge McDuck, to this day, I equate Ming Vases as the holy grail of valuable antiques. You mean Ming Dynasty Vases. Do you have any insights on old Chinese pots? Yes, when I started this channel, I wanted to do a video on cultural differences in antique collecting. And as you can imagine, as this channel started to take off and a lot of people were more interested in pop culture collectibles, I put those videos on hold. I may go back and revisit them. I just don't think a lot of the viewing audience on YouTube wants to sit through a historical video done by me that talks about Chinese antiques and antiquities or Japanese antiques and antiquities. I do have a lot of knowledge in these markets, I'm not going to lie. I have a client right now who hails from China, and he's fairly wealthy. He's going back and he's starting to buy a lot of high-end pieces of art, antiquities, and antiques from his own heritage, meaning from China. Thanks to the plethora and the growth of the Chinese middle class and the upper class, a lot of people that live in China are going back and they're starting to collect Chinese antiques from their own heritage. So the market is on fire at present time when we look at the market for Ming Dynasty vases and the like. I will tell you though, I hate to bust your bubble, there are valuable antiques from the Ming Dynasty and there are lesser valuable antiques from the Ming Dynasty. The Ming Dynasty was very well known. It's very famous throughout Chinese history, as I'm sure that you are aware. That being said, there are other periods throughout China's history that also have valuable antiques, valuable pieces of art, valuable antiquities. So it's not just the Ming Dynasty. If you guys want me to do that video, let me know. Let me know in the comment section. I don't anticipate it getting a lot of views here on YouTube, unfortunately. YouTube, as I've said before, is incredibly hype-driven, I'm learning. Next question. Sean, how is paying unheard amounts of money on art not money laundering or tax evasion? Okay, I get this question a lot. To be fair, the high-end art market, the antique side of the trade, even the high-end collectibles market, there are people who are utilizing it to launder money. I'm not going to lie. I've seen it with my own eyes. I've had people even contact me that were aware of it, and they said, hey, this dude over here is shady. Don't do any business with him. He's doing something that he's going to get in trouble with the law. Okay? That being said, if you are buying art at an established auction house, Heritage Auction, Sotheby's, Christie's, Bonabins, whatever the auction house is, most likely they're not involved in money laundering. So when you see a piece of art sell for $400 million or $450 million at an auction house and you go, that's insane, nobody would realistically pay that. There must be something going on. I assure you, if it's from a major, well-known established auction house, that sale is legit. And ironically, the IRS is tuned in to a lot of those high-profile sales. So you better be sure most people are not using a high-end auction house to try to launder money, because to be realistic, the auction house would have to be in on it. And most auction houses are not going to jeopardize their reputation to help a client who's doing illegal activity. It's not in their best interest. So money laundering in that sense doesn't exist when we talk about high-end sales that are occurring at auction houses. Where it does exist is possibly in private exchanges. Even certain, I'm going to say this cautiously, maybe certain dealers, maybe certain galleries are engaged in that to a certain degree. But overall, it is something that happens, but it's not as common as you think. The reason why you see news stories where this so-and-so drug kingpin laundered money through high-end art or antiquities or antiques is because it makes front page news. But it's not happening that often to the point where if you're going through a vetted auction house, if you're buying something through Heritage Auctions, you have to be aware or even be privy to any of this behavior. Let me just word your question that way. If you guys want to see me do a video on this, I could explore the topic from another standpoint, and it might possibly answer your question even better. I don't mind. I have a friend, honestly. He's more of an acquaintance, not really a friend. But he actually does work for an accounting organization as a forensic accountant. And one of the things that he is tuned into looking at is high-end art, antique, and antiquity sales. And he looks for any type of irregularities in those transactions, and he scrutinizes them. So that might be a topic we could explore. It's up to you guys. Again, much like the Ming Dynasty vase question, I don't expect that video getting a lot of views. I've done other videos on the art market, and they all have very low view amounts, believe it or not. That's one reason why I veered away from talking about high-end art, because most of my base is not interested in me sitting here telling them about fine art or decorative art on a regular basis. We're still going to talk about that on this channel, but I put a lot of those videos on hold just so that I could create more original content in the meantime. Next question. Sean, could you compare and contrast the first edition book market with that of the pre-1970s comic book market? Well, for those unaware, I do like investing in collectible first edition books. I myself own a first edition copy of The Great Gatsby. It's one of my favorite books by F. Scott Fitzgerald. The market for collectible first edition books is smaller than that of the overall comic book marketplace, because obviously comic books are a part of pop culture. The barrier to entry is very easy. Anybody out there who has a credit card can log on the Comic Link, eBay, Heritage Auctions, and buy a $1,000, $2,000 comic book. And if it's CGC graded, they know exactly what they're buying. With rare books, you can't do that. You also have to have considerable amounts of money to spend in most cases, depending on what type of books you're buying. Well, that being said, there are lesser known first edition books compared in most cases to comic books. Now, there are some exceptions. When we look at Action Comics 1, when we look at Detective Comics 27, those books are very scarce in any grade, let's be honest. So they would be on par with some of your first edition rare books that are out there and known to exist, especially further back we go in the world of history and antiquated books. Well, ironically, if the same amount of comic book collectors were going after the same amount of rare books that are out there on the market today, you would have a first edition copy of Great Gatsby selling for millions of dollars at present time. That's the differences between those markets. So one is rooted in pop culture, and it's more speculative, and the barrier to entry is quite low. The other market, when we look at first edition collectible books, it requires a lot of patience, a lot of knowledge, and a lot of the people in that market are very well versed on the antique side of the trade. So those are the fundamental differences. It's fascinating to compare those markets. However, when you analyze it from the standpoint of comic books versus first edition collectible books, when you dig below the surface, you're going to find those categories are not really relatable. They're not comparable overall. And again, the reason for that is comic books are part of pop culture. They can be certified, third-party graded. The barrier to entry is quite low. On the collectible first edition book side, you're going into the higher end antique side of the trade where you have to have specialized knowledge. You literally have to be aware of trends. You have to know how many copies out there exist. You can't just look on a census somewhere. Third-party grading does not exist with collectible first edition books, as most of you are aware. So you have to have your own knowledge and your own understanding of the market. Next question. Sean, congratulations on the 2.5K subs. Be interesting if you could do a video on the recent popularity of 90s t-shirts, specifically comic book, movie promo, and video game t-shirts and the like that have started to go for large sums of money. Full disclosure, I do not like this market. I do not like investing in vintage garments or vintage textiles. Those of you that recall, many, many moons ago, I did a video on sneaker investing, and I also did a video on StockX. I do not like sneaker investing for the long term. Sneakers are not meant to hold up for the long term, even if they're sitting in a box in your closet. The particular materials they are made out of will start to deteriorate and yellow over time. Same thing is true for most t-shirts, most garments, even people who come to me who have millions of dollars and they want to go after like a Michael Jackson worn item that's coming up for bid. I try to talk them out of it. Yes, the returns are there. It's a stable collecting market, don't get me wrong. But over time, if you're not going to store that item properly, it can easily get damaged. And when you go to sell it, if it gets damaged, you're going to take a bath on that item. Same thing is true with these t-shirts and other 80s and 90s fashion wear that are part of the pop culture collecting category growing in size. I don't like these markets at all, as I've said before. Good question. Next question. Sean, FANG, stocks. FANG stands for Facebook, Apple, Amazon, Netflix, Google, just so that you guys are aware. FANG stocks represent a significant portion of the overall S&P 500 index. Any thoughts on how to best diversify against the risk that the tech sector, which is what the FANG stocks are, sinks an index fund? Is my action of participating and investing in alternative assets already a form of diversification? Yes, if you are investing in antiques, collectibles, gold, silver, real estate, cryptocurrency for the long term, you are by nature already diversifying your assets. What I will tell you, there are stock sectors that are currently down. Now, there are risky because of the fact we don't know when they're going to recover. But let me name some. If you want to invest in the oil and energy sector, right now, that's been hammered to death. If you look at the price of Exxon, if you look at the price of Occidental Petroleum, if you look at even Chevron, a lot of the name players in that particular sector have been hammered. They've lost massive amounts of equity over the last several months. Another sector that's down overall are REITs, real estate investment trusts, your Simon Property Groups, your Realty Incomes. A lot of those particular segments of the market have also been hammered. Now, some of them are starting to come back. The problem with this strategy, if you invest in oil, energy, REITs, I don't know how long you're going to have to wait for those markets to turn around. I will tell you right now, in certain sectors of the REITs, real estate investment trusts, we're already seeing a small turnaround, so that's good news. But I think oil is going to be hammered down for some time, and I would imagine that certain companies still in that sector are going to end up going bankrupt. That's what scares me about oil. I am invested in oil. I am also invested in REITs. I do love my REITs because most REITs pay a very handsome dividend. If you invest in certain companies like Iron Mountain, Realty Income, Store Capital, some of those companies will pay a dividend in the amount of 4, 5, 6% on average. Well, that's unheard of in the general market. So I like that particular sector for that reason, but it is inherently risky. Another two sectors that are fairly down right now, the international stock sector. If you wanted to get involved in that, you can diversify as a hedge in international stock funds. And you can also go after value stocks. Industrials, companies like 3M, companies like Dow Chemical, a lot of those stocks have been hit hard when the pandemic hit. And overall, guys, I don't know why. Because a company like 3M, a company like Dow, they're not going to go bankrupt anytime soon. So it's ridiculous when I look at their stock price and I see that they lost, 20, 30, 40%. I mean, that's insane. Those stocks are going to come back. The question is when. So it just depends on what your tolerance for risk is and your timeline. That's what I will tell you. This is going to conclude part 3. Part 4 will air in another 3 to 4 days. Thanks for watching. I hope you got something out of this. Let me know your thoughts in the comment section below. Have a great night. And if you do like these videos, please consider subscribing to this channel. Thanks, guys.